If you're considering buying a home, this video will tell you every single closing cost you need to be aware of so you can know exactly how much it actually costs to purchase a home. There are many fees, some are more important than others, some are negotiable, and nearly all of them can be wrapped into the loan so you don't actually have to pay your closing costs all out of pocket on closing day. My name is Michael. I own a local real estate brokerage here in the Dallas area, and if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, in this example, we're going to be pretending that you're buying a $400,000 home, putting 5% down and getting a 6.75% interest rate. So first up is realtor fees. Typically, the seller pays these. You will sign an agreement with your agent. It will probably say that your agent is due a 3% commission, but it's possible that the seller of the home is offering less than a 3% commission. If that's the case, technically it is up to you to make up the difference. For example, if they're offering a 2.5% commission, but you have an agreement with your agent at a 3% commission, then technically you would be on the hook for the remaining 0.5%, as that's the agreement that you had with your agent. Now, I've never charged a client this difference. If the seller's offering 2.5%, I'll just take the 2.5%. The way I see it, it's not my client's fault that the seller is offering a reduced commission. I'm here to do what's best for my buyer, which means getting them into the house that they love regardless of the commission offered. So I don't know exactly how all agents handle this, but when you're selecting an agent, feel free to ask them what would happen if the seller is offering a reduced commission. Would I have to pay that, or would you accept the lower commission? Just get it out of the way up front. That way you know and there's no surprises. But this category should cost you $0 as it should be paid by the seller. Now we're moving on to prepaids. And this is the big category. This is the one I want you to pay the most attention to. If you're putting less than 20% down, then the lender is going to require that you escrow your taxes and insurance. This means rather than letting you pay them on your own, they make you pay an estimated amount every month as part of your mortgage payment into an escrow account. Then they take the money from your escrow account and they'll pay your taxes and insurance for you whenever they're due. This is done to protect themselves because after all, they're putting way more money up than you are. So the three categories of your prepaids are taxes, interest, and insurance. So first up, we're looking at your prepaid taxes. Typically, the lender is going to require 2 to 4 months of taxes to be escrowed as a safety cushion for themselves in case you don't pay your mortgage for a few months. For our example, we're going to use the middle number of 3 months of taxes. So assuming our $400K home is actually assessed by the city at $400K, which is not likely, it's probably going to be assessed quite a bit lower. But for our example, we're assuming it's at the full value of $400K. We need 3 months of taxes. Here in Dallas, that would be about $2,000. Now let's move on to your prepaid insurance. You always have to pay 1 year up front, but if you're required to escrow because you put less than 20% down, then you'll have to pay an additional 2 to 4 months up front. Again, the same as the 2 to 4 months taxes. This is just to cover the lender. So a total of 14 to 16 months of your insurance will be paid at closing. Again, we're going to go right in the middle at 3 months. So for 15 months of insurance, my calculator is estimating about $3,000. Obviously, this one can vary a lot depending on the insurance plan and the deductible that you choose. The next category is your prepaid interest. Whenever you buy your home, you don't pay your first mortgage payment until after the first full month. I know that's confusing, so here's an example. If you close on January 15th, your first mortgage payment is not on February because you've not yet been in there a full month. Since you moved in January 15th, February would be your first full month, which means your first payment falls on March 1st. That's the first after the first full month. This is because mortgages are paid in arrears, which means that when you make that March 1st payment, you're actually paying backwards for the month of February. Now, what this means with regards to prepaid interest is that if you close on January 15th, then you'll have to pay interest for all the rest of January. And all of that interest is paid as one sum as part of your closing costs. So if you close on January 1st, then you're going to have to pay a full month of interest up front. Whereas if you close on the 15th, you only have to pay a half a month's interest. So on a $400K home, closing at the beginning of the month versus closing on the last day of the month would make about $2,100 difference in your closing costs, because if you close on the first, you'll have $2,100 in interest. If you close at the very end, you'll have no interest. So again, for our example, we're going right in the middle as if you closed on the 15th. That's going to be $1,050 in prepaid interest added to your closing costs. So to recap, on a $400K home, assuming it's assessed by the city at the full value of $400K, the total cost of your prepaids will be $6,050. So as you can see, these prepaids in a lot of cases are the majority of the closing costs, which is important because these aren't fees. People will see $8,000 or $10,000 in closing costs and think somebody must be ripping them off, but the reality is the majority of your closing costs is you just prepaying things upfront. Now I want to take a minute and say that in many cases, you can have the seller pay all of the closing costs that we're discussing in this video, which essentially lets you put them in the loan and finance them over the full 30-year period instead of having to bring these to the closing table. So if you're short on cash or you just want to learn when and how you should do this, make sure to watch this video next. I'll also make sure to put it at the end so you don't have to click off now. Our next category is title fees. The biggest expense of the title fee is the owner's title insurance. And in a normal, non-competitive transaction, the seller typically pays for this as the burden is on them to prove that they own this house free and clear and they can sell it to you. So typically the seller pays for this. However, if you're in a multiple offer situation, you may want to offer to pay for this to make your offer stronger. On a $400K home, this would add about $2,400 to your closing costs if you chose to pay for it, but in our example, we're assuming the seller pays for this. Next, the title company will have an escrow fee for their work. On average, I would expect this to be around $500 per side, so you'll pay $500, the seller would pay $500, and then also your lender is going to require lender's title insurance. That'll be about $100. But then the lender is also going to require you to get several other endorsements added to the title policy, and these are just extra coverages for them because again, they're putting up a ton of money, they want to make sure they're extra protected. Then you'll have some optional coverage you can add. The most common one in my experience would be survey coverage, where title just ensures that your survey is accurate. If anyone comes down the road and says your fence is on my property, then title, having insured your survey, will go and correct that on your behalf. The price of this varies based on the property and the sales price, but on a $400K home, the survey coverage would be about $127 if you chose to get it. Then we have several small miscellaneous fees. So I'm putting a recording fee of $150, an attorney fee of $150. Of course, if you want to add any other endorsements of your own. So for this category, we're putting $300, which brings us to a total fee estimate for title, including your lender required endorsements, of $1,277. Now we're moving on to our third category. This is the lender fees. Okay, here we're looking at an actual loan estimate example, and I just pulled this off a government website, so this will be similar to what yours will look like. It'll have your rate, your loan amount, your estimated monthly payment, but let's go down. These are the boxes that we're looking at, your closing cost details. Something important to note is once you get your loan estimate, this box A cannot change unless there is a valid reason, like if you change your loan type, instead of doing a 30-year, you do a 15-year, or you want to put a different amount as your down payment, or if you want to buy down your interest rate, something like that. So otherwise, this box cannot change unless you make a decision that would lead to it changing. They can't change this on you, is what I'm saying. Box B, services you can shop for. This allows for up to a 10% variance. Box C, services you can shop for, of course, because you can shop for those. This can change as much as you want. So let's start with box A, and this will typically be in the $1,500 to $2,000 range. And these are the fees from the lender. So lenders can break this down into all different names. As you see here, they have application fee, underwriting fee. They also might say doc prep fee, processing fee, attorney fees, and sometimes they'll wrap those all into one underwriting fee. So yours may look different than this, but whatever fees the lender has are going to be listed here. If you're using a mortgage broker, they'll likely add their fee in here as well. And I just want to say, do not get tripped up on this box trying to find the cheapest lender. In my experience, you absolutely get what you pay for. Trying to save $500 here can cause you more problems than you can imagine. Don't choose your lender based on how cheap they are. It's the biggest purchase of your life. You want to go with the best, not the cheapest. Ask your agent what lender they recommend and why. So for our example, we are going to stick with this 1,800 number. I think that's pretty standard. Then we're moving on to box B. This is ancillary services like the appraisal, credit reports, flood certifications, anything you may need for your specific property. A credit report could be anywhere from $40 to $60, and it depends how many people are getting a credit report, how many times is this being pulled. So for our example, we're just going to say 2 people at $60, so $120. Next is the appraisal, and this is a number that can vary. I would say in this market, I'm going to estimate $650. It may be a little less if you're in a slower market, but it depends how quickly do you need it, how big is the home, how complicated is the property, so I'm guessing $650 in here. So in our example, our box B is going to be $900. Box C, as you'll see, is all title stuff, so this has already been discussed ahead of time. The only thing I do want to mention is the survey. A survey is just an aerial drawing of the property as if you were standing on top of it in a helicopter looking down. It just has all the boundary lines drawn, any easements drawn, but it's something that your lender requires. In most cases, the seller is already going to have this and can just provide it for you, and as long as they haven't added onto the house or added a swimming pool or done something that would change the survey, your lender is going to accept that just fine. On the off chance that they don't have it, they'll probably disclose it up front and say, buyer to purchase new survey. That doesn't mean you have to. It's a negotiable term. You can say, I need you to buy me a new survey so I can buy this property. But if they hold fast to that and say, no, you're the buyer, you have to buy a new survey, it's going to cost you about $500, just so you know. But in our example, we're assuming that the seller has a survey that they can hand us. And the rest of these boxes we've covered already as well. The one last thing I do want to cover here is buying down either your interest rate or your PMI. Typically in a market with rates this high, people are spending up to, I'd say an average is probably 1% of the loan amount in order to buy down their interest rate. This historically lowers your interest rate about 0.25% if you spend 1% of the loan amount to buy it down. However, with rates this high, it's gotten a little cheaper to buy down points, so you might get a little more than that 0.25%. So that, for example, would take you from a 7% down to a 6.75% interest rate, and it would cost you about 1% of the loan amount. Now in our example, we're going to assume that we're not doing this since it's totally optional, but just know if you want to buy it down 0.25%, 1% of the loan in this case would be $3,800. That's what it would cost you. But since we're not doing that, your total lender fees are going to be $2,700 in this example. $6,500 if you do want to buy down the rate. So after hearing all this, keep in mind the only actual lender fee is going to be found in box A as the underwriting or admin fee or however they decide to call it. And again, please don't try to save $500 here. You get what you pay for. So our final numbers on a $400,000 home, you're putting 5% down, 6.75% interest, are prepaids of $6,500, title fees of $1,277, lender related fees of $2,700 for a total of $10,477. So those are all of the closing costs. But then of course, in our example, we're putting 5% down. So that 5% down is another $20,000. So if you're looking for the total cash to close, you're looking at $30,477. But remember again, in our example, 100% of these closing costs can actually be wrapped into the loan, which means you would only need to bring the $20,000 cash to close. Again, to learn more about that, the video will be linked here at the end. I hope this has been helpful, and if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that info is in the description below. Thanks for watching. I'll see you in the next video.